Hi, I'm Heather Sugg, corresponding for FinTech Futures here at Fintech Meetup. I'm joined by Brad Goad, Chief Revenue Officer of Matera. Welcome.
Thank you for having me.
It's a pleasure. We have a big agenda for the discussion today. We're talking about core modernization, faster and instant payments, and what it looks like to get to that point, and discussing some lessons learned over the last 5 years. Big thing on lessons learned over the last 5 years, I'll start there. We learned that a full commitment to digital and better customer and user experience is unavoidable at this point, that everybody needs to figure out how to get to that in their infrastructure, but they're challenged with the technology infrastructure they have in place. So we'll talk about all of this and what you've seen, Brad, in the marketplace, but why don't you start off by telling us a little bit about yourself and your background?
Sure, thank you. I'm Chief Revenue Officer, as you mentioned, for Matera. Matera is a Brazilian fintech, or as we prefer to call ourselves, a software company who develops software for bank core systems. That is our history. We've been around since 1987, focused on those bank core systems. But more recently, we've become much more involved with instant payments with the advent of Pix in Brazil.
So Pix launched around 2020 in Brazil, is that right?
Correct, November of 2020.
All right, and tell me about your experience there and what you've learned in the Brazilian market that pertains to the North American market.
Absolutely. Pix has been an astounding success. Launching in November 20, so 0 transactions. Pix has now surpassed 5 billion transactions a month, per month. So I'll underscore that. The Pix system is an account-to-account or bank-to-bank real-time payment system. And what that success has done is put tremendous stress on core banking systems to maintain balances and do authorizations real-time 24/7. So we've learned a lot about what instant payments can actually do to the core banking system and the need to be prepared for that kind of demand.
So walk us through what actually happened. How did you prepare, and how did you prepare your clients for something that Let me start that question again. Brad, walk us through, how did you prepare at Matera, and how did you prepare your clients for something of that high demand?
Well, it's been a learning experience for everyone, for the banks, for us, for the Central Bank of Brazil, and everybody within the ecosystem. Going from basically old legacy systems that were batch-oriented in the way that they process transfers to now being real-time. Consumers are now transferring money real-time and need to know the balance available to do any given transaction. So as the volume of Pix increased very rapidly, it became very clear that there needed to be 24/7 availability. So we provided a stand-in solution for a lot of our core banking customers. But we learned very quickly that even that wasn't going to be sufficient. And that led us to where we are now with one of our flagship products, which is a 24/7 light ledger that can work with a legacy system and provide that 24/7, 365 availability to meet those demands of all the digital channels of those real-time payments.
And how are you seeing instances like this light ledger and other ways to tackle this applicable into the North American market?
So the translation isn't that we expect the same kind of uber volume in instant payments for consumers and business in the US, but it is an extremely good lesson in preparedness for digital banking, digital money transfers and real-time money transfers. So the translation is, how do you actually facilitate real-time payments in the US? What kinds of infrastructure upgrades need to be made in order to support new use cases that will run on RTP, FedNow, or even some of the other rails?
We're at the point where we're starting to see those new use cases come into fruition. We've had the clearinghouse's RTP around for a while. FedNow has come out with great volumes and great adoption at that point. Where do you see the future of this going based on your experience?
So I think the feedback that we get from customers, and when I say customers, I do mean banks, of course, but also other financial services companies, and also the businesses, merchants who want to use real-time payments. There's always a chicken and egg issue about who wants to use it, who wants to provide it, who's going to invest. But there's growing excitement, certainly in the merchant community, about being able to use instant payments for sales, for doing consumer-to-business payments in numerous use cases. The difference, though, is that you're probably not going to see like a sudden inflection point of adoption where you're going to see 5 billion transactions a month like you have in Brazil. There are circumstances or variables that are very different between Brazil and the US, of course. Much more complicated here, much more complex ecosystem with embedded financial tender types. But there still is a parallel in the need to upgrade core banking systems to facilitate those real-time transactions. And that's where you have to think about where the bank core systems are able to support those existing use cases for digital transactions and the digital transaction use cases that a lot of people want, like consumer-to-business payments.
So on the merchant side, what type of merchant do you see being leaders in this pack? What are you seeing happen most right now and the attention that you're getting?
Sure. The low-hanging fruit in terms of use cases for making a real-time payment are things like bill pay. That is one of the easier to implement use cases for doing an instant payment. And when I say instant payment, as you mentioned, it's facilitating a payment over the FedNow rail or RTP or something similar. However, when you go and talk to merchants, big name merchants, you think of a Walmart or an Amazon, if you want to think big retail consumer brands, they are always looking to lower their cost of payment. So that's a huge deal for bigger merchants.
Right.
And then for smaller merchants, having the real-time settlement is a critical factor in running their business because they are able to settle T+0, right? They have access to their funds right now, as opposed to accepting a credit card payment where it's no better than T+1, and they have to work directly with an acquirer, so it's much more expensive. So there are different use cases that are coming to bear, but you will see it adopt over time.
So in effect, you're meeting the needs of consumers and their demands to have that process move faster and help them with bill pay or payments they might have been late on and help them avoid predatory lending to meet those payments. And on the business side, it's helping, one, for the large businesses meet that customer demand, but the small businesses are getting cash flow that they need to survive, and even more so in today's fast economy.
That's right. Okay. And I would even add, Heather, that for banks and financial institutions, it's also a matter of extending or enhancing their engagement with their customers. It's making the bank experience, whether you're Community Bank ABC or Bank of America, you're making your experience within your wallet more of a habitual daily use kind of use case, where I'm whipping out my bank app to actually make a payment at the store, or I'm whipping out my bank app to make pay a bill, as opposed to maybe once a week, right? So for the financial institutions, small banks, big banks, it's a matter of engagement and making yourself more valuable to your end customer.
It's a huge opportunity.
Yes.
Very nice. Well, I think the big question at hand is for the next year. We're already a bit into 2024. How do you see faster payments evolving?
So I think 2024, when you listen to customers talk about what's going on, 24 continues to be a year of connection. There is still a lot of infrastructure work to be done. By that I mean connection to FedNow. Right? We have about 500 banks so far that are hooked up on bank, I think as of a couple weeks ago. But remember, we have almost 10,000 different banks in the US. So we have a ways to go before instant payments, defining it by FedNow and RTP participation being ubiquitous. So I think for now, for the remainder of this year and the early part of next year, you're talking about connection to the rail. But clearly what hasn't been focused on enough, and you're hearing it more in 2024 and in the plans for 2025, are supporting the use cases that take advantage of those connections to those instant payment rails. Paying your bill, walking into the store and using your bank app to buy your coffee or buy your gas or buy your TV.
That's the dream everybody's been watching since Apple, probably. And we've been after that.
That's right.
One thing we've learned from experience with some of the bigger techs is that there needs to be a good balance of security and low friction when it comes to these real-time instant payments and consumer adoption. So what are you seeing banks use as they go to market?
So I think that's where the big gap is, or one of the big gaps is. When we think about how do you actually go from connecting to the rails, to FedNow or RTP, and you start thinking about how am I actually going to use those rails, you have to come up with a last mile solution, as I like to call it. Like, how do I actually enable my bank app to make a payment at the POS. My customer is standing there in the store, they've opened up their bank app, now they want to do an instant payment, they want to pay by bank. How do I make that experience on common or even ground with doing a tap to pay with Google Pay or Apple Pay? And remember, Apple Pay and Google Pay are the banes of the small bank, certainly, and even big banks' existence, because they're competing for mind share, for data, for consumer engagement with Apple and Google. So thinking about that last mile experience, how do you actually facilitate that? We can look to what's happened in Brazil with Pix. When you think about the 5 billion transactions a month currently, and growing double digits month over month, over 40% of those transactions, so 2 billion transactions a month, are initiated by a QR code. So it's all secure, it's extremely secure because you are initiating a payment from within an authenticated app and scanning a tokenized QR code that's generated on demand at the time of sale to execute that less than 6-second exchange from, hey, here's your receipt or your bill, scan it, confirm it, done, settled, banks, money's in the account. That is all supported by a QR interface, a fully tokenized QR interface that's actually based on an EMV standard. This isn't some crazy Brazilian standard. So it's something that we're all familiar with in terms of a payment payload. So that's the translation, I think, to the US is we already have something that's robust and secure and that's on par with the tap-to-pay NFC experience.
And consumers are comfortable with QR codes now.
Extremely.
Well, Brad, it's been a pleasure. Thanks for filling us in, and I look forward to following your progress.
Thank you so much for having us. Appreciate it.
Thanks. Enjoy the rest of your show.
Thank you.